Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi, I'm the Conscious Day Trader, also known as Yanis, my real name. And today we had a great day. We made $1,663, the biggest day I've ever had in terms of my day trading. And it happened during NFP. Preparation was all morning in terms of seeing the setup, and it didn't involve any fundamentals in terms of my what I was expecting to see, if it was going to be more than the expected number in terms of how many, 200,000 or 230,000. I didn't look at that. All I looked at was the price, and potentially, regardless of what the number would have done, what would be the easy picking for the algorithm to take before it actually goes in the moving direction. It ends up going a lot higher, but I was happy with the results that I got. So let's jump on to, first of all, let's show you the results. This was the move, and now it's screaming upwards, 1,663.50. But actually, after the costs, it will be 1,569. So really good profits. And then if we jump back to our regular trading view, as you can see, and if you're familiar with my way of trading and showing you the charts, you can see that I've allocated how the London open, or the London kill zone in terms of ICT. And I am trying something new in terms of how I enter the price. It's not ICT, it's not scruffy. I'll call it Yanis. It's something that I'm trying it, and it's in between. It's definitely scaling in, but also making a better price as the trade is happening. And I'll explain a little bit more of that in this trade, but I'm going to keep it to myself in terms of just to prove, to have enough historical data to show that it is actually doing what I want it to do. So let's start with the daily, as always, to see what we saw, to identify that obviously I was long, and a lot of people would think that this market is a shorting opportunity, and it would be. You would be right. If you were shorting in the London session, you would have made really good profit, and I know people that have. And what, especially because if you look at the bigger picture, we've identified in previous sessions trades that this here is from the 1 hour, from the daily, has a fair value gap that this will want to feed, but also something that I've mentioned to you before, and I predicted a few days back, that this sell side liquidity will come and be filled, and it did. What happened in today's session, and how did I think I was going to go long the pound? So let's drag the previous day, which is the 5th. So we're going to bring in the daily range to the 5th. Right there. And then what we do is take the Fibonacci just to get the 50% to get our equilibrium. Drag that down to there. So what area are we in now? Discounted area. That's one reason to be long. What's the other reason? The other reason is that a target that the algorithm were talking about completing, these equal highs on the daily, has been taken out. So what would be the next target? One target is down here to fill this fair value gap. The other, obviously I haven't drawn it here, but you can see it. This fair value gap that we're in now, this is the fair value gap that we're in play at the moment, and that's coming from that screamer up all the way to the top here. Fill this fair value gap, fill this fair value gap, and now that's another reason that I was long. Did I find an opportunity to go long in the London session? No, and we'll see that. I did take a little small trade for a loss, but actually I took it out, and then I was waiting for the New York session to see the setup, and I absolutely had a target of the 18500, which it hit. And as you can see, when we go onto the 1 minute chart, that 18500 was a number that was holding really strong. And that's when the sentiment started changing. So if we go to the 15 minute, and we don't need to put replay, as we know. I'm sure a lot of people are watching the NFP live, and I would like to see as it's going, it's happening. Now look at this. This would have been enormous profits if I could hold, but I'm not used to making 1,600 in a day. And when that came, I didn't want to risk losing it. With NFP, you can go either way. So you want to be in, out, and if you've been paid, then that's it. So at the beginning of London, we saw a sell-off through that area of sell side that we already filled in the previous sessions, and then crashed down and broke the daily. Now this is where I was interested, because we broke the previous day, and like I said, if you were short, what a great opportunity here. 72.6 pips that you could have shorted that, and there was a lot of setups going short. If my bias was short, in terms of ICT trading, you would have this break here coming into fair value and then sell off. I didn't take that. These were fair value gaps of my first trade that didn't happen, and I had to take some loss. But after it broke the daily low and I identified the area of one, let's put a line on, or let's put a horizontal ray on the 18500, that's 02, close enough. So that area, actually let's put the specific number on, and that area there, you can see is holding its own, especially on the 1 minute chart. And what did the market do when NFP hit? Broke that, the 1850, and a lot of people would have seen that as they would have got scared in terms of, because it's been holding in the previous 2 or 3 hours, that this market will be selling off. Obviously fundamentalists will say that if the numbers were different, that would have crashed down, but the argument technically is that we have been selling off all from London, and the sell-off needs to be balanced in terms of this fair value gap that we can identify on the 4 hour. There has been a huge drop, and this huge fair value gap from this area to this area, and these equal highs here, is a great opportunity for the market to just push it up. And NFP might even, I haven't even looked at the numbers, it might even come back down after it hits this fair value, because we're going to put that's the fair value gap, but also what you've got resting above these highs, equal highs, is a really nice area of buy side liquidity. So what will the market want to do? Come up into the buy side liquidity, and then if the actual move is a Judas move and they want to sell off, we had that fair value gap that we were looking at in the daily. But if it's even going to go higher, if you look at where to bring in a Fibonacci, where is that sitting, that fair value? The buy side is roughly around the 50, and the fair value is literally in the golden eye. What else is in the golden eye is the previous daily low and daily high equilibrium. So there's no reason why the market can't push up into these areas before it sells off, if that's what the results of the NFP is. This was the 105 that we talked about, and that was the reason I went long, because I thought that the market will come and rebalance the orders from here, and these equal highs. The market likes this to come and retest and take these out. So and the reason is because like we said before, and ICT says it all the time, if you're trailing down, your stops are going to be these highs, your buy stops. So that's the reason why they would take it out. So let's go into the actual trade. Where did I see my fair value gap to get in? It was quite close to the NFP. and that's why my stops were very tight. As we said, I identified that area. Soon as that area came above and we had a break of structure, I was happy to trade this. So let's go back to the first time it touched it back here, and look at that, just touch it to the pip right there. That was caught my eye after the London session going into lunchtime. That's normally where the algorithm, you know, there's not a lot of trading going on in terms of human trading. Algorithms take over, and you can find areas like this, like little clues of, I haven't used this before. Here we go. Let's what shape should we put? Let's put a signpost with a heart. Okay, so that area there was a little area of significance, and it came back up through lunchtime, and then 12 o'clock, from 11 to 12 o'clock, and then we had the New York session starting, the pre-market. And this is the area where I got in. We had this first attempt to break the highs of this. Look at this as well, equal highs, not a very convincing break. So this is quite interesting in terms of, it's a bit riskier taking this, because a lot of the times if you're shorting, this is another area here that you would call buy side liquidity. Let's just put that in there. And as you can see, it touched it and then sold into that, what you can argue is a fair value now on that area of 118,500. Remember, we've been selling all week. So this number, round number, could have been a target from Wednesday. We hit it, and you can see now it's been respected. And this is where, when the sell-off came in, we had the actual break here. And what I did, actually, if I draw a little square like this on this candle, let's make it a different color, like a yellow. If you drag that across, you will find that it's the biggest green candle that we've seen from back into the Judas move of the Judas move that we had from the morning session. So if we drag that back to this area here, even in these areas, this is the biggest candle we've had in the whole session, trading session. So that's another clue that I was like, oh, something's changing. There's a shift in the market. And as you can see, we broke the highs, came back in to retest the top of the fair value gap here. That area there, and that will be your fair value gap, and it touched it to the pip and went up, and I took my profits around this area here, and then the market came down. That might have been scary. It would be for me if I was still in it, and we had really good profits. So I staged in from this fair value gap. Every time it came back and touched this fair value gap, I build up another position, and my stops were very tight below this area here. Remember, this looks like a big move, but in terms of pips, that candle is only 15 pips. So I wasn't risking that much in terms of if it came down, and especially if it took out these equal lows here, I would have been out. So my stops were around here, but I would probably have moved them a little bit lower below these equal highs, because as we know, it touches and then it goes. And as you can see now, it went all the way up. It's created, screamed up to the top, creating new areas of interest if you are long. Where could it go? Potentially back to equilibrium. So these are other areas that you can trade up. And again, this is not trading advice. Don't use this as a signal service. It's literally educational, and for you to enjoy this video as well. But look at this. This is live data now. How beautiful are these equal highs? Okay, someone says that's resistance. ICT will say that is building buy-side liquidity, because what are we all going to do, recreational traders? Put our stops here. And that's what the market is going to go and take out. And if you look on the left side, it's not far off from that equal high. It's actually taken it out. It just works every time. That's what ICT calls it, reading the tape. I did mention that I'm trying something about my entries, something new, and I'll give you a hint. It's all about getting a better position. So if I entered in the market here and I want to get a better position, my worst position, I'll close it, and then I have less risk, and I also have another position that I can enter the market at a better price. And that worked really well today for NFP. I need to test it, and when I'm confident that this is going to become part of my trading, I will introduce it, and why not share it with you guys as well. Before, and as you know from Scruffy Trader, I've always pound averaged in what he calls Scruffy Madness. Today I did it a little bit different. It's the still same philosophy of not going full position, breaking your positions into how many you're breaking them, 3 to 5 positions, but also killing positions as I don't like what I see on the chart, and repositioning, what you call like trading management in a sense. So really good day, super happy with the NFP and the whole week. I just want to quickly show you that we've had, this would have been the best week I've ever had. Let's see how much it is. I haven't seen it. We're going to see it together. And let's switch the screen. 3,000, so 2,866. That's really good. Hopefully this will continue. And if you want to see more live trades of the ICT Concept 2022 mentorship, also I would definitely check out the Scruffy Trader as well, to how to manage the trades. Brilliant Discord community, and I'll catch you next time. Have a good weekend.
Run it.